Yesterday we were talking a little about capital market. We just had an overview of capital market. Capital market is also known as industrial securities market. We saw about the features of capital market. We will be having a recap today. And then we have to see we saw about the meaning of capital market, the types of capital market. Now we will see about functions of capital market, structure of capital market, and also we'll have a recap of the features of capital market. What are the functions of capital market? As we saw, capital market help industries get long-term funds. In case they don't have funds, they would have access to others' funds. This was possible through intermediaries like banks, AMCs, and other institutions involved. So now we will see what are the functions of capital market and how it helps our economy. It is going to mobilize all the resources, or it is going to mobilize the funds between savers and users. Those who have surplus funds are called as savers, and those who have shortage of funds are called as users. Those who need funds rather. I need funds, I don't have my own fund. I can always have access to somebody else's funds, both in the capital market and money market. Now we'll be studying about capital market. So when I see the functions of capital market is economic growth. How does this happen? Yesterday I told you, when I needed funds, I approached a financial institution. We say I approach a bank. I approach bank for helping me with funds for funds in terms of long-term funds, right? And I want this money for buying some assets in my company or machinery in a company, right? With this machinery, I will produce goods and services, and I will sell these goods and services. So when I produce goods and service, I'm going to employ people. When I employ people, I will be giving them salary or wages. When I give them salary or wages, they will demand goods and services, and they will spend that salary on that. Right? When they spend the salary on buying goods and services, it will increase the demand for my goods and services, and I will be able to produce more. Right? So when I produce more amount of employment. And this will also lead to investment. This will encourage investment. Thus, my economy also grows. There is economic growth when there is capital market, because these funds are for longer term, and those who want to save for long term can save for long term, and whoever has saved, their funds are allocated to productive uses, like corporates can use it as capitals. Talking about saving habits, it also promotes saving habits among people. Like people will start saving when they get a return. So this saving will be converted to, see earlier how it used to be. I'll just make an annotation here, kindly note. Like I say, I'm going to say savings is equal to I hope you understand this. Savings is equal to income minus expenditure. When I say savings is equal to income minus expenditure, what does this mean? Now, whatever I earn, I am going to meet my expenditures with that. And when I meet my expenditures with that, I am going to meet the expenditure, and there is also some surplus amount left after meeting the expenditure. Supposing I earn 10 rupees and I spend 8 rupees, 2 rupees is my savings. Now this savings will be converted to investment. I will have more savings only when I have the option of investing them and earning more on that. I'm already earning by way of income. Now, after spending, why do I earn income? So that I have purchasing power. I can purchase goods and services. Now, when I purchase goods and services, I am going to spend on that. So whatever I earn and whatever I spend, the difference between them is called as savings. So now what will happen when I have savings? I feel in the market or some institution it says if I keep some idle funds with them, I'm going to get some return on it. 2 rupees will give me 2 rupees and 5 paise after a year. So I will be tempted to make it 2 rupees 5 paise because this is just going to lie in my pocket. Instead of that, if I park it in a safe investment avenue, I'm going to save some money and multiply that money. Correct? So this promotes savings habits. The moment it is passed on to some institution and which is allocated to productive uses, it is called as investment. Because all of us in the economy are rotating our surplus money and earning by that. So it is called as investment. Savings that earn a return or excess of income over expenditure that is going to earn a return over the period is called as investment. Are you understanding? So, capital market majorly promotes economic growth by increasing the productive capacity of the economy. I just explained the process to you. It promotes savings or investment habits among people. And apart from that, it also stabilizes and has a systematic security prices in the sense like see because of the demand and supply process, because we are going to be mobilizing the funds, there is going to be everybody is going to get funds when they need. If in case there is no capital market, right, if in case nobody has everybody has their idle savings with themselves, like see I save 10,000 rupees a month, I don't invest it in any financial institution. Now, what will happen? Those who need capital may not get it. And if at all they get it, it is going to be at a very, very expensive rate. So people may start speculating when there is no availability of capital when they need. When I need, I should get capital. Otherwise, what I will do, I will start accumulating. जब मिलता है, accumulate करके रखूंगी क्योंकि मुझे future में ज़रूरत पड़ेगा. And I will be paying an interest on it, which may be costly. Or I can even do like this. अगर economy में जब भी मुझे चाहिए तभी मुझे लोन नहीं मिलता है, मैं क्या करूंगी, जब भी मिलता है मैं ले लूंगी. I will accumulate and keep. When somebody asks for a loan because he is not getting, I will charge him a very, very high interest rate. I will be paying 6% to the bank and I will be charging 10% from him. So this causes speculation. But this is absent because capital market makes our as resources so liquid that anytime I need capital, I can have access to other savings very easily. That is what I mean by saying it stabilizes the prices and it is very acting in a systematic way. I will share my whiteboard so that you can take down the notes. Do you see my whiteboard there? Are you able to see my screen share? Whiteboard? Structure of capital market. Who's the regulator here? If I can have my answer in the chat box. SEBI is my regulator. And then I have intermediaries. Corporates. And then I will say public and private sector. SEBI is the regulator. And then I will see the instruments. Okay. Structure of capital market. Here I talk about shares, bonds, intermediaries, which are corporates, both government and private sector. And then we have SEBI as a regulator. We have instruments like shares, bonds, and also mutual funds, which are also investment into, I will say mutual funds also if you want. They are both short term and long term. Majorly, these are the things that we talk about when we talk about capital market. Are you following this? Are you following this? So I'll go back to my old screen. Going back to the same thing. Now I said we are going to talk about what are the capital market intermediaries. We have, so who are intermediaries who are going to be mobilizing the funds between savers and users. These are the capital market intermediaries, stock exchanges, National Stock Exchange, Bombay Stock Exchange, Multi-Commodity Stock Exchange. Then we have the banks, and then we have the insurance companies, pension funds, and we will call this as asset management companies. Asset management companies. These are mutual funds are instruments. Mutual fund units are instruments. Asset management companies are the intermediaries. Now, we are going to see the difference between money market and capital market, and then we will come to the recent development and the role of SEBI. So I will share my whiteboard. I will make a note so that you get, in case there are some additional points in the handout also, you can learn. What are difference between money market and capital market? what are the features of money market? Do you remember the features of money market? Deals with short-term funds. And now when I talk about capital market, long-term funds. Do you remember that? Do you remember this? Yes, no? Do you remember this? So do you recall this? Just go through these points and then we'll have a, if you've gone through this. I repeat, money market is a market that deals with short-term funds for less than a year or so. Capital market deals with long-term funds for over 5 years usually, and we have no involvement of brokers in the money market, whereas in the capital market, to deal in capital market, brokers are mandatory. You need to be registered with brokers, only then you can deal with. The instruments popularly dealt in money markets are commercial papers, certificate of deposits, bill of exchange or commercial bills, treasury bills. Whereas in capital market, we deal with instruments like equity shares, preference shares, bonds, debentures, etc. And in money market, we never had the component of secondary market. Whereas in the capital market itself, we had classification of primary market, where first-hand dealing of securities. Securities were issued to investors by the issuers, and in secondary market, there was transaction between investor to investor. The regulator is RBI here, and the regulator is SEBI. Now, one more thing about money market is corpus or amount to be invested is very high. Amount of investment is high, whereas capital market amount of investment is as low as rupees 100. You can buy a you can invest into mutual fund with rupees 100. Usually retailers do not participate here because the amount is high. Retailers participate here. So any doubts so far?